Hello and welcome to another update video about DOT. Yeah, on the DOT chart, we are still in a rally, but that rally looks still corrective. So that simply means we only have choppy overlapping price action from the most recent low, which was formed here on Saturday, the 13th of April. That doesn't mean it's necessarily bearish, but it means we still need to be on the side of caution. And it means we still can't really justify to confirm that the low is in, even though it of course could be in. But whenever we only have three waves, it keeps the door open for lower. So the overall idea is obviously here still that a wave one topped here, around middle of March. So that's the wave one, basically after a first 5-wave advance completed. 1, 2, 3, 4, 5. Topped here, and we're now looking for this wave 2 pullback. There are two key levels that now we need to be very much aware of. Well, the first level is that $4.60, 78.6 retracement. That's the lower boundary line of the relevant support area. And this lower boundary line ideally holds, okay? Because if it doesn't, then we will most likely see invalidation. That's not an invalidation point. The invalidation point is down there. I think it's 360. Just $1 less, 355, the October 2023 low. There's a difference between invalidation point and support, but below support, it becomes quite likely that we get invalidation. So I'm still looking here at this as a 1-2 setup. We are still in an overall bullish market, but all I try to say is we can't rule out another low at this stage. We can't rule out that the market will test, for example, the next support levels in the yellow support zone, or trend reversal zone. I mean, essentially the wave 2 should complete in this region and the wave 3 should start, and we should reverse from a local downtrend into an uptrend in this particular price region. But yeah, I can't rule out that we test, for example, 560 or even 460 next, which are the next support levels. Only below 460, obviously, things are starting to break. So that's sort of the idea, that after 5 waves up, which indicates the trend direction, we have a 3-wave pullback, which should form a higher low and is a counter trend move. Whenever we get 5 waves, we usually have to expect a 3-wave counter trend move. And there's nothing unusual about this. We have seen 3 waves down. I've changed one thing on this chart. Changed it from what I had as a W, X, Y structure to an A, B, C. Again, no, just labeling, and the only difference is that this here could be a bit larger, this 4th wave, because we could then be in a C wave of an ending diagonal. So 1, 2, 3, 4, 5. Okay, we seem to be moving in a descending broadening wedge or something, at least some kind of a price channel. Pay attention to this trend line here. This is around $8.20, so pay attention to that level. And yeah, I'm looking at this as a 1, 2, 3, 4, 5. This could be a wave 4 rally. Nothing unusual about this. It's a bit large for a wave 4, but in an ending diagonal, absolutely acceptable. Looks a bit distorted, which is also why I brought the yellow count on the chart a few days ago to indicate, yep, we could have bottomed. Just can't confirm it yet. It would be a guess. But bottoming is a process, so it usually takes a little bit of time to be able to confirm it. And it tells you, however, the parameters that need to be reached in the yellow count. And in the yellow count, once these 5 waves to the upside are filled in, I'll be able to confirm that, we've completed basically wave 2 down there on the 13th of April. It means that the 3rd wave needs to reach 854 at least. Okay, that would be my first ideal target. And then we need to see 5 waves above $9 basically, or to reach $9. Now, if we don't even get there, and as long as we only have 3 waves up, it can still easily break down. And the next micro resistance level is at $7.85. So the 785 level that you see there on the chart is the 100% extension level. And that's a very, very common target here for a corrective rally, the 100% extension. So it's an ideal target for a C wave within an ABC correction. And the C wave obviously, could, for example, top there at 785. So of wave 4. And then we could get a move down. And once we see a move below the wave 2 low, that's at $6.28. That's really the key level. That's the key invalidation point basically for the yellow count. once we see a break below that level, yeah, it's basically confirmed that the wave 5 to the downside has started to unfold, probably targeting $5.65 or $4.60. Those are the key levels. I mean, I'm fairly neutral. I mean, I hope it's bottomed, but one more low is absolutely still on the table. That means if there is one more low, I can tell you it will probably scare a lot of people. It probably will scare a lot of people, which is quite normal in these corrections, especially in a wave 2 correction. Yeah, I mean, they can be quite scary. We know that. So that would not be anything unusual. I just want to make sure that this is clear, because yeah, wave 2s are, I mean, if they scare you, then they've basically done their job, right? That's what they do. They just scare people. It's just completely normal. So yeah, just wanted to make sure that is clear. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.